Hi, this is Jack. This is my bar by bar review of the S&P 500 futures contract for Wednesday, December 18th, 2024. The first bar of the day is a bear doji bar, testing last month's high and reversing up. Prominent tails, so I expect whatever breakout we get not to get very far. It looks like we may hold support, but we're below the moving average, and it could be two legs down in an overall trading range. Therefore, we may find buyers down here. We have a whole round number, 6120. Sorry about that, here. So for that reason, probably buyers below and probably sellers above. As with any open, I expect a trading range and disappointment. Bar 2 is good follow through for the bears, but we're failing to close beyond the prior bar, and we have a big tail on the second bar. So it could be an implied two legs down, and we could have a climactic overshoot here on bar 2, and we're holding above support, which means we may begin to rally. Bar 3, we triggered a buy setup above bar 2 and broke above the moving average, only to reverse down, forming a bull doji bar. We tested 6120 and made a higher low and a higher high, and we could begin channeling higher. I think if you're short, it's reasonable to get out of shorts above this bar, but it's not quite enough information for me to do anything yet. And then bar 4 is a strong bull reversal bar closing on a time. Reasonable to buy the close or buying a stop above the bar with a protective stop down below. Probably going higher and probably always in long, but overall tight trading range. And what is the probability that we're going to get all the way up here before we get back down to the low of the bar? Honestly, looking at this chart, I think it is close to 60%. I think it's maybe better than 50%. And if I were a buyer, or if I were trading, I would be a buyer on this bar. And that explains why we got bar 5. Bit of a climax bar. This body is much bigger than this body, and this body is much bigger than this body. So climactic behavior is not going to be sustainable. I expect that we're going to go higher, but I also expect this breakout to fail at some point because of this climactic behavior. Probably always in long and probably going higher. This is the first breakout of this swing high here, so we need follow through. Minimal follow through, it's a bull bar, but doji, and with a deep pullback into bar 5. We're holding above the moving average, it's starting to slope up, and we have 4 consecutive bars up. I suspect whatever breakout we get to the downside to be minor, and for us to find buyers. We could have had a small pullback and then a second leg here on 6, and for that reason, we may find profit taking up here at the high close from the end of the day rally yesterday. Small pullback and then more follow through on bar 7, good for the bulls, but again, we're risking a double top up here. Climactic bar on 5, minimal follow through 6, and then actually not bad follow through here on 7. This bar doesn't look quite climactic as 5 did, and we're getting above the high close on 77. So probably going higher, and probably whatever reversal down we get will be minor. Now we have 5 consecutive bars up. It's reasonable to be long, but I would be quick to get out because we're still inside of a trading range here. Strong sell signal on bar 8, but probably buyers below. We could have a double top, and it's good enough context, but we have a higher low here on 2, and we made a higher high here. We found sellers above this high, so we may find more sellers on whatever rally we get, but I expect bad follow through and probably buyers below this bar. For that reason, we got bar 9. Bar 9 is a strong bull reversal bar closing on its high tick, and for that reason, it's a buy signal. It's good enough context. It's a high 1 in a strong bull trend. On a smaller time frame, this is a small pullback bull trend. There is some overlap here, bar 6, 7, and 8, but bar 9 is trapping the bears that took the stop entry on bar 8. And for that reason, bears are probably going to be forced to cover above this bar, and that makes it a good buy. Small pullback beyond the midpoint of bar 9, and then a rally, more follow through for the bulls, probably always in long and probably going higher. Climactic bar on bar 11, testing the higher time frame EMA and breaking out far above it, only to reverse down and close below it. We're testing a prior day's low here, and we have yesterday's high here, and it looks like we're probably going to get there, but the bulls need momentum. We have smaller bars here and smaller bodies, and that tells me that we may need to pull back before we rally. But again, whatever rally we get, or whatever sell-off we get, may be minor because this rally is quite strong. This is a strong bull trend. For that reason, We broke out below 11 and reversed up, forming another strong bull reversal bar, closing on its high. And for that reason, I think it's a good buy at the close of this bar or above this bar. The bears were trapped selling below 8 and forced out of their trade on the consecutive bars up. And bears are trapped again on bar 11 and 12 and will be forced out of the trade above these bars. And that explains why 13 shot up the way that it did. We're breaking above yesterday's high and we have a prominent tail here. This could be a climactic bar. It's a fairly big bar with a big tail late in this bull rally, and therefore we may find profit taking and we may need to pull back here. But what do you notice about this trend that's different about down here? We were facing a double top and that failed, and now we're facing, you could say, a double top here, but I would say we got a breakout above a prior day low, the EMA, and follow through here on 13. 13 is breaking above yesterday's high, and if it gets follow through, this may turn into a small pullback trend. And it did get follow through, and this is a bit of a surprise, and surprises have second legs. For that reason, we're probably going higher, and whatever reversal down we get will probably be minor. Small pullback, and then another rally on 15. 15 is a bull reversal bar, again, probably going higher, and probably whatever reversal down we get will be minor. The only problem now is we have 4 very strong bars after the bears were trapped here on 11 and 12, and this is coming fairly late in this rally. We have leg 1, pullback, leg 2, pullback, leg 3. So we're inside of leg 3 in what could become a leg or climactic leg in a trading range. We're getting close to a prior day's close here, bar 81. So I imagine we will find sellers in hesitation up here. But 15 probably going higher. 16, bit of a climax, tail on the bar, but still probably going higher. And then 17, bear inside bar, closing on its low. This is the first sign of hesitation since bar 8, and it's coming late in this bull trend after consecutive buy climaxes. And that tells you that we may be running out of momentum here, and we may need to pull back. Bar 18, we tested the high close on 16 and reversed down, forming a strong sell signal bar, closing on its low tick. We're just below resistance, this prior day's close. You could say this prior day's pivot low from the end of day sell-off, and we're turning down from that point here. The low close would be 77. In any case, we have a reversal with follow-through that tested the high close, so this is now resistance up here. And we're moving away from that price aggressively. Bar 17 opened and made a lower high and then sold off, closing near its low. And then 18 tested the high close, sold off, and is closing on its low tick. And these two bars represent relentless selling. We did pull back deeply into bar 17 here, but only to let the bulls out who bought the close on bar 16. For that reason, this is a sell the close bar and sell pullbacks and sell for any reason. I think the context is bad to sell, therefore the risk reward and probability is not very good. For the bears, this is your 1-to-1 target, yesterday's high, but the probability of getting here before we get to the high again is not 60% at this point, I would say. So if you take this short, I would say you need to swing trade. You need to go for 2 times your risk in order to make this trade work. Or if you take this trade with a stop up here, you've got to be quick to get out and get whatever profits you can get. 18, probably going lower, but we may find buyers down here. We have a lot of open gaps, and this is a very strong bull trend. Hesitation and buyers below 18, but another lower high and a very weak close. This bar's high did not get to the high close on bar 16 before it started to turn down, and is closing below its midpoint and below a round number, 61.45. Probably going lower. We're channeling lower with lower highs and lower lows, but so far bad follow through for the reversal. Bear breakout bar on bar 20, this time closing on its low with a smaller tail on the top of the bar. We could see bulls panicking and selling out of their longs if we continue to go sideways to down, and we could get an acceleration bar to the downside. Bar 20, sell the close as well, stop up here, reasonable, but you better be swing trading because the probability still may not be 60% that we get down here before we get here. but a reasonable sell. Just be quick to exit. And then 21, give up bar for the bulls. Any bull who bought up here saw this deep pullback and how weak this rally was, this attempt to rally, and gave up on these two bars. We're nearly to the 1R profit target, and we're stopping just shy of the moving average and just below yesterday's high. So we may find buyers down here, but I suspect that this sell-off is strong enough and scary enough that the bulls are going to continue to panic out of their longs. And that's what happened on bar 22. We have another acceleration bar. This time it looks like it is just about 2 times the risk of selling the close of bar 20, and it is 2 times the risk of selling the close of bar 18. So swing trading bears are now making money. So this is evolving into a trading range rather than a bull trend that's going to last all day. Also, about this rally, this is so many consecutive bars up that it's not sustainable, and for that reason, it's becoming a leg in a trading range. And that's exactly what my worry was when I was watching the market today. I was watching the 3-minute chart, but you can still see it on the 5-minute chart. This is just not what a bull trend looks like that's going to last all day. For that reason, I think whatever rally we get is going to form a trading range, and we'll find more profit taking and selling at these highs, or maybe at this bad sell signal bar low, or this good sell signal bar low for all the bears that did not get short and missed out on this sell-off. So always in short, probably going lower, but we may pull back. Losing momentum with bar 23, we have a doji bar. We could have a climactic sell-off, and now we're testing support. Support could be the open of this bear bar, and the gap has been closed. And we also have this swing point here, and this gap is still open between the bodies of the bars. And that's a sign of strength for the bulls. Also, if you measure from the bottom of the rally to the top, we're just around the midpoint of the rally. And there will be bulls buying down here, but I suspect whatever rally we get, not to get very far before we're met with disappointment and more selling pressure. Strong bull reversal bar on bar 24. The stop order bulls that bought around the midpoint are being rewarded for their behavior. Now we have stop order bulls making money, almost 2 times their risk in one single bar. So I suspect whatever bears are still short will use whatever sell-off we get to buy back their shorts and start to cover. I think 24 could be a buy vacuum test of resistance, probably yesterday's high, or probably the most recent strong bear breakout, 21 or 22. So therefore, we may find profit taking up here, and we may pull back. Sell signal bar on 25, closing near its low. Probably buyers below for a second leg up of 24, but the bears want a second leg down and a failed bull breakout on 24 for a second leg down. Traders bought the close on bar 25, and we're starting to rally. But there's a problem with this rally. This is not a strong buy signal bar, and we're breaking out above it. And that means that whatever breakout we get will probably end up failing and pulling back to test this support level if we do not pull back on the next bar. So 26, probably going higher, but I expect a pullback, which is what we got on 27. We didn't make a new high on 27. We have an inside bar, and it's a doji bar. For that reason, this is a stop order signal bar for the bulls. It's at least 2 legs up, and it could be an implied 3-legged move already, so we may find profit taking up here. We also have the sell signal bar lows up here that are test magnets. Weak doji, weak follow through for the bulls on 28. Really not ideal, and if you're holding long, you got to be thinking that it's a good idea to get out below this bar. For that reason, it's a decent short. I think you might need to use a wide stop or wait for a second entry because we've yet to have a spike break since 23. Instead, no spike break, and traders bought the close, and we rallied. But climactic bar, we have a tail, and it looks like we're testing the sell signal bar low and failing to close above that point. So we have resistance here and a prominent tail, reasonable to get out of longs below this bar, and reasonable to look for a bear bar to start shorting. Bear breakout 30, but tail, we may need to pull back again before we head down lower. Breakout pullback sell, testing the moving average and reversing up. We have a body gap open between the body of 26 and the body of 32, but this may be too much downward momentum, and whatever rally we get may end up forming a tight trading range and be disappointing for both the bulls and the bears. Channeling lower, 32, outside bar, finding sellers above 31. I suspect we're flipping to always in short, but we'd probably need one more good bear bar to confirm that. 33, small bar, channeling lower, again, probably sellers above and sellers below if I had to guess. Instead, we have buyers at the close of 33. We tested yesterday's high and we're holding it as support now. We have 1, pullback 2, pullback 3, a small spike and wedge channel pattern on a smaller time frame. We don't have any open gaps. We have the body gap here closed. So this is probably a trading range, and this is not a very strong buy signal bar. Therefore, I expect whatever rally we get to ultimately lead to disappointment. It's 2 legs up in a trading range, and it could be 3 legs up, implied legs, that is. So we may find profit taking and selling pressure up here. Losing momentum for the bulls on 35, probably going higher, maybe buyers below, but really not ideal. And then a give up bar on 36. 36 to me looks like a statement piece. It looks like a statement bar. It tells you that the bulls are not as in control as they appear, and the bears may be much stronger than they appear. 36 could be a sell vacuum test of support, just like 34 might have been a buy vacuum test of resistance. We have the pivot high here on 29. We have the sell signal bar low on 17, and we're turning down from those prices consecutively. So now we have a higher high double top and a lower high double top. Overall, we're making lower highs and higher lows. So we have a triangle, which looks like this. I suspect we're going to go more sideways and have disappointing follow through, but 36 is a statement, and that tells me that we may be going lower. I think it's a reasonable sell to close bar. I think it's a little risky. It's just below the moving average, just above yesterday's high, and we may need to pull back first. But instead we get a breakout bar, bad follow through, weak close on 37, probably sellers above for another leg down, and that's what we're getting here on 38. 38 is a reasonable sell to close bar with a stop above for a second leg down, but the risk is we're in a trading range and we could be near the bottom or at least in the middle. Channeling lower, 39, good for the bears, but big tail, probably going to channel lower. Buyers at the close, possibly for a second leg up from this rally, after a complex 3-legged move, leading to a bigger leg 1, pullback leg 2. At least that's what the bulls are hoping for. But we have 4 consecutive bars down. We have 1, pullback 2. This could just be part of a complex 2 or 3-legged move. Deep pullback in an attempt to rally on 41, but small double top here, so we may find selling. 42 channeling higher, and then a bear breakout on 43. 43 is the 3rd leg down, at least for the bears since this sell-off here, and it's a strong bar closing on its low. I suspect we'll go lower. Instead, buyers below for a tight trading range and a strong bull reversal bar for a high 2. It's a high 2 at the bottom of the range. It's a micro double bottom after a big leg 1 up, but I think there's so much selling pressure in here, this is not an ideal buy, and I think we'll find profit taking and selling above the high of 42 if we get there. 45 broke out above 44 and trapped the bulls into a losing trade. So now we have trapped bulls that bought on a stop above 39 and trapped bulls that bought on a stop above 44. For that reason, we have a failed high 2, and I suspect we're going to get another leg down from this sell-off starting on 35, 36. Small tight trading range here, buyers below 45, but another possible failed breakout, testing yesterday's high, the moving average, and closing at the higher time frame moving average. And it looks like a give up bar on 48. 48 is 130. Today is an FOMC announcement, and the FOMC meeting started at 2 p.m., I think. 13:30 is 1:30, so that means in a half hour, Jerome Powell is going to start talking, and the chart is going to look very different after he starts talking. This is a shaved bar, which is a sell signal in and of itself. We have a small spike and wedge channel pattern happening here. And we're at the bottom of the channel. For that reason, I expect bad follow through, but if we get good follow through, we could fall below the low of 23 and test lower prices. Buyers below 48, testing the top of the channel, could be a buy vacuum test of resistance. Reasonable buy the close bar, but overall bad context. You're buying the close, betting on a breakout of a channel that hasn't really occurred yet. If you connect these highs, we have not really broken out yet. And instead, bad follow through for the bulls. Now we're oscillating bear, bull, bear. It's a small tight trading range, and we're channeling lower, holding below the moving average and failing to get consecutive closes above. And for that reason, we may get some give up bars and I think we still need a bigger second leg down from the sell-off on 36. Reversal with follow-through on 51, but weak close in a tail, testing the low close 48 and reversing up. I suspect sellers above and more downside momentum. 52, trying to get the bull breakout, but failing again at the moving averages, and we have a weak close with a prominent tail, so probably more sideways to down. Small rally, but inside bar, and then outside down 54. 54 is not an outside bar, but it's near outside bar, and it's a strong sell signal closing on its low tick. So far, in the last hour or so, stop entries have not been working very well, and traders are selling above bars and buying below bars. But to me, we're consolidating and channeling lower below the moving average, and we keep testing yesterday's high and failing. We failed from above it here, 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 and all throughout here. So I suspect we're going to go lower. Reasonable to sell the close, but I think you have to use a wide stop, maybe above 38, to make it work. I think it is probably 60% chance that we get down here before we get up to here because of how much selling pressure and bad follow-through we're getting for the bulls. Holy crap. Huge climactic bar on 55. This is probably the ultimate bull give-up bar I've ever seen in my life. This bar looks like it's about 20 points big. Let's see how big it is from start to finish. This is 21 points big. This is by far the biggest bar I've seen in a very long time. It completely dwarfs everything on the chart. And when you get a bar like this could be part of a complex two-legged move that began here and then resumed maybe over here. But to me, this is a huge, dramatic surprise that trapped any bull buying lows here, or buying lows here, or buying anywhere inside of these gaps and here. And let's see where we're closing. I wonder if I can point this. There we go. So we're closing below the low of the day, and we're testing the stop entry signal bar for the bulls starting at this rally. So we have a vacuum test of support here, and we're breaking out below last month's high. This is such a giant bar. The only way you could really trade it for small traders like me would be to go to a smaller time frame. There's really no way I could sell the close and risk 20 points on a single bar. That's just insane. Even though I believe we certainly will go lower, we may rally first before we do. We have a huge breakout gap between this close and that close, the most recent breakout point, and these points here. And there's a high probability that we could pull back inside of this gap and maybe even higher before we sell off. This is the beginning of the FOMC announcement at, you can't see the time frame here. This is the beginning of the FOMC announcement around 2 p.m. And it's clear that the market does not like what's taking place here. I'm going to go ahead and leave this zoomed out so that we can see better. Jesus, duplicate bar. Holy shit. Let me measure this one. Jesus Christ. We did not even pull back into the range of the first breakout bar. This bar is 28 points big. Let's do the math. 28 and 21. That's nearly 50 points in 10 minutes. The market fell 50 points. The market was trading at 61.35 and it fell 50 points. The market almost fell 1% in 10 minutes. That is incredible selling pressure, and we are clearly going lower. But again, there's no chance that a small trader with a small or even a big account can sell the close with a stop up here. But that's what you have to do. You have to trade small. There has to be a way to do it. And the only way I would do it is on a smaller time frame, like a 1 minute chart. And really that's not ideal. So really I can't trade at all, but I'm certain that we're going lower. This is incredible. Bar 55, 56, clearly always in short and clearly going lower. In fact, everything else from the prior days just looks like a rounding error compared to these two bars. Small follow through bar 57, we may begin to pull back, but I suspect whatever rally we get to be brief and met with more selling pressure. We're channeling lower, bit of a climactic bar on 58, but I suspect still lower prices. Looks like short covering on 59, and I say that because while this looks like a somewhat strong bar, while this looks like a buy the close bar for a failed bear breakout, this is not nearly as strong as the sell-off, and for that reason, there's nothing to do here but look to sell. Reasonable to sell the close with a stop above the big breakout bar, 56, and then look to add on if as it goes in your favor, or add on if it goes against you. We are probably not going to rally from here. Outside down on bar 60, clearly going lower, clearly always in short. I mean, it's off the charts. You can't even see. This is incredible. So 60, clearly always in short, clearly going lower. It's around 230 now. Trying to go outside up. The bulls don't want to go down without a fight, but this is most likely just bears taking profits on these shorts and then looking to sell again higher. Prominent tail on this bar tells me it's a trading range, and we're channeling lower with lower highs and lower lows, so I expect lower prices. 62 bear bar, trading range bar, and inside bar with prominent tails, still probably going lower, and whatever rally we get probably will not be successful, but we do have 3 pushes down: 1 pullback, 2 pullback, 3. So we may find more profit taking down here, and we might have to go more sideways before we go more down. But channeling lower 63, small pullback, and then a sell-off, and a weak close. That tells you that bears may be scalping out down here. But then again, a give-up bar on 64, a climactic bear breakout with a prominent tail. Still probably going lower, but really overdone. I mean, the market has fallen, geez. Let's see how far the market has fallen at this point. From the low close to the high close, the market has fallen 80 points. And this is just a matter of maybe like a half hour. So I don't know what the fuck Jerome Powell is talking about, but the market absolutely hates it. Probably going lower. Really good sell signal bar here. 65, probably going lower. 66, definitely going lower. Prominent tail, we may find profit taking. Whole round number, 60-40, but still probably going lower. Jesus. Small pullback and then a sell-off here, 67. Eventually, the bears are going to have to start taking profits, and we're getting parabolic here, so we may find profit taking below this bar, and that's what we did find here. But weak close on 68, and that tells me we'll probably have sellers above. Instead, sellers at the close. 69, testing the low close and breaking out far enough below it. That tells me that we're going to go lower, but prominent tail, we need to pull back a little bit. 70, more follow through, and then 71, failed bull breakout, bad buy signal bar. Huge tail, probably more profit taking by the bears, and probably bears looking to sell short again at the last near the high of the last strong sell-off starting on 69 here. We may rally again, but I suspect we're going to have another bear breakout and lower prices, and that's what we got on 72. Climactic bar 72, but clearly always in short and going lower. Look at the moving average. It's so far away, and for good reason. This is far above average bearishness, and that justifies the slope of the moving average. We're very far away from the moving average. In fact, how far away are we? We're 50 points away from the moving average, and that's rare, except for the open of the day. But when you're selling below the average price, you need much more above average bearishness, and that's what we certainly have here. 72 probably going lower, small pullback, and then another sell-off, 73, but tail, we may find profit taking down here, but probably going lower. Jesus Christ. Another huge climactic bear breakout bar coming late in this sell-off, late in this bear trend. Let's see if I can get a picture of it. Here's the sell-off in its entirety. We have a spike pullback channel, and the channel is becoming parabolic here, which is why we had a pause and hesitation. And again here, climactic on 74, we're getting parabolic, so we need to hesitate and go sideways. Instead, we get more follow-through on 75. This is incredible. And at this point, the market has fallen from the low close to the high close 200 points. So at the high of the day, the market was trading at, let's call it 61.40. And the market has fallen how far? 200 points? From the low close to high close? Yeah, 200 points. Trading at 61.45. The market has fallen 3.2% in a matter of, and let's see here. We started falling here to here. It took about an hour and 40 minutes for the market to fall over 3%. This is incredible. Probably still going lower, but instead buyers around the close of 75. Reasonable buy signal for a relief rally and short covering into the close, but I suspect whatever rally we get is going to be met with disappointment and selling pressure. Good follow through, but smaller bar for the bulls, not ideal. And then a huge bear bar, 78, just annihilating the bull case. Any bulls that bought up here are certainly trapped and going to get out below this bar, and that's what's happening here with 79, 80. Bar 81, short covering into the close of the day. My God, what an incredible sell-off. This is unbelievably massive. Jesus Christ. I did look at a 1-minute chart at some point during this sell-off, and I wasn't trading. I told myself I was done. I did my trading earlier in the day, and I was just done with it. Maybe once I have greater stamina and more experience, I can trade through FOMC events in the future because, good God, I mean, just pick a bar anywhere. You could take any stop entry and use a wide stop and, don't sell here, maybe don't sell here, but then look to sell here. It's incredible. I mean, yeah. And all minor resistance will fail. Everything up here is just a rounding error. Incredible. Wow. Anyway, that's my read. That's the day. We ended the day clearly always in short. I suspect we're going to gap up and find buyers, but I wouldn't be surprised if we gap down and move lower or have maybe a small gap and then a trading range. After a giant move like this, I imagine the institutions are going to need to think about what they want to do before they continue doing anything. It's December 18th, so we're coming up on Christmas. Typically, the market rallies around Christmas. At least that's the word on the block in the industry from what I know. But what do I know? So anything could happen. I suspect we have more downside to come. If you look at the daily chart, we have a big, we have a big fat bear bar that is much bigger than any bar on the screen. And that tells you that this is changing the character of the market. We're closing below the low close here. And for that reason, I suspect whatever rally we get to find disappointment and selling pressure and sell off more. But we do have a prominent tail here. And we're still just shy of this buy signal bar, this bad buy signal bar. And in fact, if I pull up TradingView and we look at a different chart, you'll see that I think we closed at, this is the continuous contract, so this is not the same as what we were looking at, but the close here of today is closing above the buy signal bar for the bulls here. Come on, man. Make me look good. There you go. This high right here. Come on, man. What are we doing? There you go. Here, let's put it right at the high. Here. So we're closing above this price, and look at this. We've gapped up, and we're starting to rally. So maybe it's not all that bearish. I mean, it's anybody's guess. If I had to guess, we're at least in a trading range, and we're at least going to get a second leg down from this bar. We may pull back first, but I expect that pullback to be minor and be met with more selling pressure. Let's take a peek at the 60-minute chart just for fun. Jesus Christ. Yeah, look at this. This is incredible. Wow. We're closing below prior month's highs and prior week's lows. We've undone a lot of the rally here. Let's take a look at the weekly chart. So good sell signal bar for the bears, and the breakout so far has a really good entry bar. It looks like we're testing the moving average, and we reversed up just shy of it. But this bar is strong enough and scary enough, I suspect it'll get a second leg down. And, it's coming in reasonable context. We have a bull channel here, and really, we're only just testing the channel line. Something like this. Or maybe something, I'm not sure actually. I kind of want to look at a monthly chart. Let's look at that. So strong sell signal bar here, strong bull bar late in a rally may attract profit taking. I don't know, man. I just know that intraday, this is absolutely batshit crazy. And earlier in the day, everything looked pretty crazy as well. I thought this was surprisingly strong. And I thought this was surprisingly strong, and that's confusing. I think I traded up until this point here. And I think I did well through here. I was actually trading a 3-minute chart. And I don't think I've posted a trade review about it. But let's see, I got long here and got stopped out because my stop was too tight. It was at the low of 5 and it triggered on bar 6 even though we didn't break out below. So then I got long again above 6 and held through this pullback, and I added on to my position on bar 7, 8, 9 until we got this bar, and then I think I took profits here. Then I think I didn't get long all the way here until here, because up until this point I was pretty sure that this was going to turn into a trading range because that's what we've been in. But then we got a bull breakout with follow through, and the follow through doesn't look very good, but the bear breakout failed. And now we're getting a strong bull breakout here. And this is actually a buy signal bar. It's closing at or above the midpoint, even though it's a bear bar. It's not ideal, but it is. It's close to a buy signal. Maybe it's not closing above or at the midpoint, but it's close. It's good enough context to make me think that we have an open gap between the bodies of these bars, and therefore this bull breakout should work. So therefore I bought the close here, bought again here, bought again here, and I think I got out somewhere around here and then entered again up here. Here's where my day started to turn into shit, because I started to fight the pullback on bar 28, 29, 30. Once I got 30, I knew that I was wrong, and I think I got out for a loss somewhere around here, and then I got short on bar 34. At the time, bar 34 looks like a scary bar to get short on because it's 1, 2 legs down at the moving average after a very strong bull trend, which is a breakout on a higher time frame, and this is barely a retracement of that rally. This is maybe a 20% correction here. So it's likely that we'll find buyers at the moving average for a second leg up. The only thing that dissuaded me from buying and that gave me comfort selling were all of these lower highs in the failed buy setup that happened here. We tested the high close 27 twice, once on this doji and then once on this bar 30, and we didn't get there on 31, and we closed below the midpoint here. That tells me that bulls are probably getting out of their longs up here, and I was too stubborn fighting the market, trying to get long up here, wanting the trend to keep going, because to me, I just thought it would keep going forever. But it didn't. So then when I got 34, thankfully, I had control over my emotions, and I could see through them, and I could see that clearly this is a strong reversal signal in a consecutive bar micro channel after 3 bear bars in a row, a strong sell signal bar, and the stop entry worked for the bears. So now we have bears holding a 1R profit. If you took this stop entry with a stop above, you're holding a really good trade. You're feeling really good. Therefore, whatever rally we get should fail and be met with selling pressure. For that reason, I sold the close here with a stop above the bar, and then we pulled back only to sell off even stronger on bar 35. 35, I'm not sure if I got short here, and actually I think I made a mistake. I think I flipped to a 1-minute chart at this point. Let's see, this is about 11:15, so let's back it up to 11:15. That's about here. So I think I got out on my 3-minute trade, and then I saw the weakness here, and I think I got short around here with a stop up there, and then I took quick profits here. And I don't think I did anything down here. I think I tried to get short again, but we're starting to catch support here, and we're stalling at the moving average. We worked our way lower, and I think I had a losing trade in here somewhere. Then we got 114, and then a bull breakout here. And at this point, now it's 11:25. I think I flipped back to a 3-minute chart, and this is a problem for me. I should not be looking at a fucking 1-minute chart, and I know this. And this is something I journaled about. I talked about it with my trading buddies, and I'm well aware of what I'm doing and what I'm doing wrong and what I need to do better. But anyway, I flipped back to a 3-minute chart here, and I'm emotional through this sell-off, trying to win back whatever losses I made up here. And thankfully, I could see through my emotion and see the price action. And actually, this setup right here is actually one of my favorite setups. It's a climactic sell-off that's starting to stall around some support level. You could argue that we have support anywhere through here. Why? Because we have the moving average, we have the bear trap that happened on 14.15, and then this failed sell signal bar that never triggered here. And for that reason, that's support. We have trap traders getting relieved on bar 13.14 here, and this is a buy signal bar closing above its midpoint. Therefore, it's a reasonable stop entry. And I think I waited for this bar to go, but I did end up taking the stop entry after it started to move higher. I think I got in somewhere around here. And then it started to reverse into the close, and I think I got out around the close of the bar. I don't think I got 1 times my risk. And I could have done a lot better with that, because when you get 39, you're thinking, okay, this is a good enough bar. I should be quick to get out, and we may pull back because this is a bad buy signal bar, but 39 is a big bar. And if you're short down here, it's reasonable to cover above this bar. So as long as we get above this bar before we start to pull back deeply, and as long as we don't pull back beyond the bad buy signal bar high, it should be okay to hold long. And that's what happened here. I think traders bought the close. They saw the strength in the failed bear breakout down here. At support, we also have this pivot point over here. So we have a layer of support, this swing high, this swing here, the moving average. It's a failed breakout of the moving average. And also, I measured, this is about the midpoint of the sell-off. So there's a lot of little support happening down here, and this rally is reasonable for that reason. So thankfully, I was able to recover some of my losses, but not thankfully, I didn't have a very good process in dealing with this sell-off. I'm changing time frames, I'm over trading, I'm revenge trading. And these are all things I need to work on, so I am going to work on that. I've journaled about it, I've talked about it, now I'm talking about it again. So it should not happen in the future, and I'm going to do my best to mitigate the situations where that does happen. And this is all a practice. I know that as a trader, I need to practice, and this is my practice. And I can only get better by practicing, and I can only get better by making mistakes and understanding what my mistakes are. And so that's what I'm doing. I really enjoy day trading, and sometimes it's stressful and an anxious thing for me, but I think I'm doing well, and I think I'm right where I need to be, and I just need to keep chugging along and keep learning from my mistakes, and keep learning myself and learning who the trader is within me. Anyway, that's my review. Thanks for watching.